From the morning reading, SPX recovers from a lower open. NDX lower on Microsoft, Apple, Tesla. Semiconductor weakness. 6 of 9 sectors moved higher on Tuesday. XLY, XLU, and XLV were the strongest sectors, while XLB was the weakest sector. Breadth strengthened as advancers led decliners led 1.3 to 1 on the New York Stock Exchange, and decliners led advancers 1.03 to 1 on the NASDAQ. The US dollar has been strong against most currencies in all the major ones. Looking at 5-year trends in the 6 major currencies against the dollar, all of them are now at least 1.5 standard deviations below their trends. That's the first time in more than 30 years that all 6 have been at such an extreme. Typically, when all 6 are at such a big deviation from their long-term trends, the dollar was near at least a multi-month inflection point. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:53 a.m. Central Time, and I'm recording this in preparation for the market day of November the 11th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And we have generally bullish activity on all 4 of the U.S. broad market indices. The S&P futures are up almost 7 points at the time of this cut, or about 1/3%. Russell futures also 1/3%. NASDAQ futures just under 1/3%, as is the Dow futures. And crude oil, you're down 1.36%. Euro, a scratch. Bonds, we're down just a tick or two. Remember, the bond market will be closed today, so I suspect that futures will be open on the bond market until about 8 o'clock Central Time, somewhere in there, and then they will close. Also, banks are closed today. There are no major macroeconomic reports for today. The regular market, equities, and equity futures like the ES and so forth will be open, but volume is likely to be very light. Poor follow through for day traders. Day traders, you might be better suited to do some study, some research, or even go do something entirely different. If today is typical, if you do take setups, make sure that you do have good indications of momentum and energy and volume, or you'll likely find yourself chopped up. Gold is down just marginally, also just below scratch. In overseas action, China up about 1/4%, mixed action in Asia, Hong Kong down about 1/4%, and Japan just up over scratch. Germany's doing well. Germany's up about 1.4%. United Kingdom's up about 0.6%. In terms of macroeconomic reports for today in the U.S., there is nothing. In terms of tomorrow, you have the weekly employment claims. FOMC member Evans speaking. Crude oil inventories is on Thursday this week, so be aware of that. And then FOMC member Dudley speaking. Finally, a 30-year bond auction is out, so that could affect those of you who are bond traders. In terms of current volatility conditions, with yesterday's action, VIX short-term dropped to a 14.29. Skew remains elevated. IV percentiles 9 on the S&P, 18 on the Russell, 14 on the NASDAQ, and 19 on the Dow. No standard deviation moves were put in yesterday on any of the U.S. indices. In terms of the daily report, let's go ahead and bounce to the charts real quick. So we've had this kind of rollover, which was very easy to foresee. We had classic candlestick patterns, bearish engulfing, doji confirming that rollover pattern, and we've now gone several days into this bear flag pattern. Yesterday's action was important in that the bulls did come in and take this up off the lows. We did get a positive day yesterday. Also note that each day, while the bears have pushed down, and we do have a series of lower intraday lows up until yesterday, we have these wicks on each of these days, and these aren't super small wicks. So each day the bears pushed and the bulls recovered and pushed the action back up. Now this day, of course, was a standard deviation move to the downside, and was probably in some ways the most bearish of the whole sequence. But this has been then met with this bullish candle here. So we had gone and effectively about 4 days with down action, but this one here reversing that trend. So we'll see if the rally begins and we start to move and break out of this flag pattern. It could happen as early as today. Sometimes with holidays you have a slight bullish tint to action. When a lot of the players are missing, things tend to drift up. And there's not any macroeconomic news today to speak of that is likely to be a trigger event. So likely it will be a slight drift to the bullish side. Now that being said, there's going to be probably really poor follow through to anything that sets up today. So just look for that momentum. In terms of being able to make these all-time high area, which is up in this area, you're probably going to need some sort of triggering event to be able to drive the momentum to get up there. We probably won't go from right here at 2082 area all the way up, some 50 points without something to come in and generate some activity. Now Friday will bring more activity, and you do have OPEX next week. There tends to be a bullish rise into the options expiration, the monthly version, each month. So that might we might very well find ourselves, by the time we get to OPEX into next week, up here in this area. We'll have to wait and see how that plays out. Right now, we're not expecting any kind of significant breakdown, and this pullback right here, while it's been several days and the most pronounced in this some 250-point move, is nowhere near challenging enough or scary enough to be threatening the intermediate term bullish bias. In terms of the Russell yesterday, also a bit of a bullish recovery. Again, we're looking for the Russell to truly break out and resume this former area here. And the NASDAQ. NASDAQ a bit weaker. It was an up day, but the close was below the prior day. So we call this a false up day, in that it is a green candle, but the close is below the day before's close. So false up day. And, while it has a bullish tone to it, it's still bearish as well, in that it continues this downward trend. So the NASDAQ definitely was hurt yesterday. Now, again, we've been complaining about the NASDAQ breadth, and an awful lot of this gap and go move was built on, good earnings on a couple large components. Well, this action here yesterday was also largely down on the back of one component, and that being Apple. So just always keep in mind, are you seeing broad participation, or are you seeing a couple individual components that are driving that? And that is particularly true if you look at the Dow. Remember, only 30 companies, so literally one company with earnings or some sort of news can really make this look like it is doing something that, frankly, the other 29 companies might not be participating in. So just always keep in mind the breadth of some of these indices. They're not all created equal. So nothing really terribly to note here. Much like the SPX, also a wick below, a higher close than the day before after following a standard deviation down move. Obviously, if it had been more bullish, we would have loved to have retaken, half this body from the prior day. It was not that. So you kind of give a little bit to the bulls, a little bit to the bears, and not too much to be made of either side. terms of the daily report, still phase 3 bull flags, expecting that those flag patterns will be relatively shallow and that the flag will trigger into a bull pattern that will be relatively longer. IBD status still remains in the confirmed uptrend for our portfolio investor posture. Accumulation distribution score on the S&P is a B. NASDAQ did improve half a notch to a C+. So that's encouraging. GMI index fell a point to 5 out of 6, but still retains a buy signal, though that author remains in cash. Primary market condition is still a neutral bear. In terms of the decision points scoreboards, no changes here. Still short to intermediate term, largely bullish, but still holding on to those long-term bearish indicators. So consensus between all this is still in transition, with short to intermediate term decidedly bullish, but got these mixed indicators on the longer term still pointing bearish. In terms of intermediate term market posture, that is a very bullish posture with an upslope sentiment, and all 4 indices are up over 90, so very, very bullish. Position sizing opinions remain both systems at 100%. In terms of hedge warning status, we retain our level 0 plus, and I believe it's tomorrow will mark a tie with the longest period in which we've had an IBD status of confirmed uptrend for 2015. So this has persisted for some time, though we're still looking to see if we can actually accomplish something with any of these signals in this year. This year's been largely range bound and very poor follow-through for the bulls whenever we have gotten these confirmed uptrend signals. So we're looking to see, is this time going to be different, or will this one fail like the ones in the past? In terms of special volatility metrics, you see some of these ebbed off today. Very clean profile here. We did catch a distribution day on the NASDAQ, so that count is now up to 3. Skew remains elevated. In terms of the lower indicators, nothing really of note here. We did have more new lows than new highs in the New York Stock Exchange, but not at warning status. On the key intermarket risk aversion indicators, all 5 are solidly risk on. There was one that's starting to roll over, but it has not yet crossed. In terms of special opinions, option income strategies, and well, frankly, all 3 of these are still at the same warning status, so I'm just going to leave that there. If you're brand new to us, you can read this. Well, I'm going to go ahead and drop down to the market posture. Sector specific, you see quite a mixed picture there, and take note of the ones that are holding up the best. Consumer discretionary, healthcare, financials are the sectors that are holding up the best, most consistent, while utilities and retail are probably the ones that are struggling the most, followed by consumer staples. Now, utilities actually put in a okay day yesterday, and indeed we can look at the percents. See, utilities was up about 0.2% and was the second best performer, but the market posture is still quite weak on utilities. And indeed, remember, they had a very big down day last Friday, and you look at the 5-day, 1 month, 3 month, year to date, all these measures are negative on utilities at this point. So it's not just one day, it's what is the consistency of that performance over time. And you see the rest of these materials having a tough day, as well as information technology. So that should be enough for today. If you find that what you're getting here each morning is helpful to your trading, there's a number of ways in which you can show that acknowledgement and appreciation for what we provide here as a free market preview each day. You can certainly like us on YouTube. You can subscribe to the YouTube channel, and also, of course, retweet us to your Twitter followers, to your StockTwit followers, etc. Direct emails can go to support@falconglobaltraders.com. There are a number of special offerings. I'm going to highlight I think this one today. Keep in mind that we produce a day trader's daily price guide, and this is a very modest subscription, only $25 a month. And for that $25 a month, you get 8 key futures markets, or if you prefer, 8 key stock markets. And for the 8 key futures markets, it covers the S&P, the Russell, the Nasdaq, the Dow, the bond, the euro, gold, and crude oil. The clearly 8 of the most important futures markets that are commonly day traded by day traders. This daily price guide, it's packed full of information that is absolutely a huge resource for each of your daily setups. And I cut out just a little picture, just a little excerpt, just to show you a piece of this. But this would be 4 different markets, and you see all the key support and resistance levels all stacked and in association with each other. So it's very, very easy to see and anticipate where clusters of support and resistance might come in, and set you up for good solid entries as well as target selection. So absolutely invaluable. That's sent out to the subscribers each morning by about 7:30 a.m. Central Time, and again, only $25 a month. Just go to this website right here if you'd like to see more details about what that product looks like, some example guides and the like. Disclaimers as always, hit the pause button if you need more time to review, and we will see you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.